2024 is coming to a close, and a lot of people are coming out with bold predictions on what's going to happen in the housing market. Realtor.com came out and said Boise, Idaho is going to hit $1.2 million in the median sales price by 2033. Let's dive into what this article says, and then we're going to actually go into the data and what needs to happen for this to happen. And also, are the trends showing that we are going to hit that projection by 2033? According to Realtor.com, our median sales price is $465,000. They're saying in less than 9 years, we're going to hit $1.2 million. Their forecast is based off of the growth that we had pre-pandemic. They're saying 58.2% growth rate observed between 2014 and 2019. When the crash came to the Boise Valley market, it hit us hard. There was a lot of homes, especially in 2011, 2012, 2013, foreclosures, short sales. You could pick up a house at a decent price. For instance, this house right here, somebody could have bought it in 2015 for $100,000. And so if they bought it for $100,000 in 2015, again, the article talks about the projections between 2014 and 2019. I think this house sold back in 2017. That's correct. I was the one that sold it. In 2017, this house ended up selling for around $190,000. If this same house were to be listed today, it would be listed for over $400,000. So in a matter of 10 years, inflation in our housing market, in the Boise housing market, has increased almost 4x. If this person who bought this house for $100,000 kept it today, they would 4x bought it for. If the growth goes and has a steady growth like what we've seen before, there's a chance that we could see prices at 1.3. But there's a couple problems with this. What employment is coming to our area that's going to allow people to afford a house like that, especially with today's interest rates? We got to look at that. We also got to look at the current housing market. Are we seeing growth trends like we did in 2014 and 2019? So we're going to take a quick peek at that as well. What is the current median sales price? How many houses are being sold? In 2022, we first were talking about, hey, the market is correcting. We are starting to see HUD homes. We're starting to see foreclosures. We're starting to see short sales hit the market. And so are we going to continue to see that? The only way to look at it is the growth of our current housing market. Are we seeing more people enter the housing market or more people stepping back or selling what they bought in 2020? Don't forget, if you want to sign up for our monthly newsletters, fill out the link below and send it out every single month. I know you guys miss these videos. An email is a lot easier to read. So make sure you fill out the link below to sign up for our monthly newsletter. Unfortunately, nobody has a crystal ball. And based off projections, we might think that they're going to be way off from that price range. One thing we want to look at before we get into actual housing, we want to see, okay, what is a builder? What are builders doing? How do they feel about the current housing market? How do they feel about the current status? So I'm going to pull Lampro data. What we can see in Q2 of 2023 is that in Ada County, there was about 6,709 vacant lots. In Canyon County, we're sitting at 3,081. What has changed between 2023 and 2024? In 2024, vacant lots have increased in Ada County, and in Canyon County, they have decreased by roughly 70. But the other thing I want to look at is new construction permits. So if we were looking at new construction permits and compare them to Q2 of 2023, we'll be able to see builders feel more confident about the current housing market, or are they still pulling back what we saw in 22? So in 24, right now in Q2, there's 1138. That's how many new construction permits were essentially pulled. In 2023, there's only 1,000 new construction permits pulled. So we can see that builders are feeling a little bit more confident as they have increased the amount of they've pulled in Ada County. Now, in 2023, in county, they pulled 706 permits, and we're seeing the same sentiment in 2024. It increased to 763. Both Ada County and Canyon County saw almost a 10% increase in how many permits were being pulled. So we're seeing that builders maybe feeling a little more confident about where the market is heading. Now, before I get into more data, since we have a new president-elect coming to office in the next month and a half, we are seeing more people feeling more optimistic. We've seen more buyers enter the market here in the last week. Normally between November and second week of January, the housing market is pretty slow and dead. But what we've seen is more buyers are jumping into the market, feeling more optimistic, thinking that, hey, I need to jump in now before the huge rush of people enter into the spring. And so they're jumping into the housing market. Now, we have seen that here in the Treasure Valley. We don't know if it's a glimpse because in the last year, we've seen waves. We've seen a week or 2 weeks where buyers jump into that market because the interest rates drop a little bit and then they pull back. The interest rates have dropped a little in the last 2 weeks. Is that the reason why? Or is it the optimistic thing about Trump? Or is it the fear of inflation that our dollar is losing value and people want to put money into a house and capture this wave? Let's look at the Ada County housing market for October. Keep in mind, we have to use the October stats because everything is 30 days late. The homes that went pending in October, we'll see those sold data on the November report. So we're going to look at October because we don't have November. So let's just jump into that right now. One thing that jumps right off the bat to me is the closed sales. Closed sales for October 23, we're sitting at 557 homes. It had a substantial 44% jump, 805 homes close in October of 24. So there was a big demand. Now, something that didn't reflect this in 21 and 2020, even in 2019, we saw that when more homes were closing year over year, the buyer demand was increasing. That resulted in a higher sales price. Here, what we're seeing in October of 23 and October of 2024, the median sales price did not have a huge jump. We're talking about the median sales price year over year for the month of October. The other thing we want to look at is the jump in sales. Is that just like a glimpse? Is that just a blimp in the system, in the matrix, or is it a continuum? One thing we are seeing is the pending sales increased 32% year over year. So we are seeing more buyers getting into the market in October. I will be very interested to see what's going on in November as we have seen more buyers getting into the housing market. We bring this up because in order for these projections to come true, we have to see the number continue in closed sales, and we got to see the number continue as far as the pending sales. So if those numbers continue to increase, and also we have a supply decrease, then we would probably see a median sales price continue to increase versus staying flat. So let's just break this down. Inventory increased 12%. Pendings increased 32%. So we have a surplus. If the pendings continue to increase and our inventory is not increasing as much, then we're going to have less supply than we do demand. And that's going to cause prices to increase. We haven't seen that reflect in the median sales price. The absorption rate or the months of supply is also increasing. We aren't seeing this like huge demand come back, but it's something that we definitely want to watch for. Now, let's jump over to Canyon County because Canyon County is interesting. Normally in the Treasure Valley, what we see is on the outskirts of town. Ada County is the central hub of the valley, and then Canyon County is on the outskirts, and then counties on the outskirts of that. And so in Canyon County, our pending sales dropped 3%. Our number of solds, the same thing that we saw in Ada County, that the closed sales increased 38%, almost 39, jumped from 329 to 457. Our median sales price increased 3% year over year. Not a huge increase there. Something you got to keep in mind is a lot of these homes, when they're being sold, they're giving away concessions. So typical concession is like a 3% concession. And so if they increase, you may not necessarily have 3% equity, as you'll see here in a minute. Our pending sales are down and our inventory has increased. In county, we are probably going to see this months of supply of inventory continue to increase. Unless the records show in November that flood of buyers that enter the market, unless that continues, we're going to see this month's supply increase. But one thing I didn't do with Canyon County real quick is how does it look different for resale versus new construction? So we know that builders have increased their permits that they pulled in Q2. But in this resale, something that's very fascinating to me is the resale market. So in the resale market, almost every single one of these numbers are up. The month supply has shot up almost 35%, which is substantial. The inventory shot up 30%. Now, the pending sales are up almost 69%, but our median sales price is down. Our inventory is increasing. One reason I believe that it's increasing is we're seeing more people struggling to make payments. Things aren't changing, but we are seeing more houses being sold as short sales or people giving their houses back to the bank. We're seeing more of those hit the market as buyers who bought back then are struggling to make their payments. They're having to either short sell because they don't have the equity or giving it back to the bank and walking away from the property. If we see a huge increase of that, We're going to see a lot of distress sales, which is going to drive prices down, which is part of the reason why I think we're seeing a bigger increase in inventory. Last year and the years prior, sellers were like, I don't need to sell. I think we're seeing more people being forced to sell because of making their payments. Now, as far as new construction goes, this is a very surprising number. According to this, the pending sales is down almost 25% year over year. The reason why this is important is because when builders are struggling to pay, they're more optimistic. If they aren't selling as many homes, they could have not been building as much, but there's quite a bit of new construction inventory, as we're going to see here in a minute. But the other thing too is when they aren't selling houses, higher incentives, right? So if I'm a builder and I can't unload the house, then I'm going to try to do other things. Toll Brothers, they came out, hey, we're going to help you and we're going to fund a 2-1 buy down. For those who don't understand how a 2-1 buy down works, let's say today's interest rate is 6.5%. At 6.5% on a 2-1 buy down, for the first year, you're only going to be paying a mortgage based off of a 4.5% interest rate. By year 2, you're going to be paying it on 5.5%. And then by year 3, you're paying the full 6.5% interest on your loan. That fluctuates your payment anywhere from $200 to $400, depending on your purchase price. But builders are giving away these incentives, still trying to move their inventory. When we see the incentives from Hubble Homes, CBH, and Tresidio, and Toll Brothers get pulled back, then we'll know they're moving inventory faster, and there's no reason for them to do that. I think in order for that to happen, we're going to need to see these pendings not have a decrease year over year, but an increase year over year. Which brings me to the next point of how many vacant homes are currently on the market. Normally, there's a reason why they have the house on the market in the middle of the holidays. We just left Thanksgiving. We're getting ready to go into Christmas or Hanukkah. And so people who have their houses listed that are living in them are going to have a different motive to sell their house than somebody who doesn't have anything in their house. So out of all the inventory, I just want to do a quick scan. We're going to look at active homes, single family with acreage, and townhouses. We're just going to look in Ada County, Canyon County, Jim County. These are the counties that make up the Treasure Valley. Right now, we have almost 2,800 homes that are active in those 3 counties. When I click vacant, what you're going to see is we have almost 2,000. So out of the 2,800 homes, almost 2,000 of them are sitting vacant. People don't like maintaining houses when they're vacant. One, part of that's going to be new construction inventory. And some of that's going to be somebody who maybe had to move back to where they originally came from, or they're relocating out of Boise because they can't stand the cold. And so when we look at vacant inventory, if the vacant inventory increases, then that's also going to put pressure on people who are selling their houses, whether it's new construction or resale. And so we need to watch all these numbers. Again, let's just recap everything. If we see the inventory continue to increase, but our sales are decreasing, then that projection of being at $1.2 million median sales price in Ada County, if that's not happening, if we look at the housing market, we got to look at jobs, right? Many people will move to Idaho or the Boise area. They're working remote, or they will commute back to California or Washington to do their job. Essentially, their family is living here, taking advantage of the amenities. The other thing we want to look at is the current unemployment rate, and is that going to increase? Because if our unemployment rate increases, then we know that the jobs aren't going to keep up to pay for that $1.2 million house. We got to see an increase in job wages. Right now, when we go to the Idaho Department of Gov, we can see our unemployment rate is sitting at 3.7%, slightly up from September, which was 3.6. That's not a big increase, but it's something to watch, right? Because if unemployment increases, there's probably very unlikely that we're going to be able to hit that $1.2 million price range by 2033. But inflation is real. The dollar is being crushed, right? We saw gold increase. We saw Bitcoin increase. We saw a lot of this hopium enter the market when this new president-elect was elected. And the question is, will it stay? Do you think it's going to stay? Inflation, right? We looked at that house. That house was bought in 2014 or 2015 for $100,000. Right now, it could be sold for $400,000, even after the correction we saw in 2022. The reason why some of these prices are increasing is because of the hopium, because the dollar is losing value, and because our national debt, right? So let's look at this chart at our national debt. It has been skyrocketing since 2020. It has increased almost $10 trillion in our national debt, and it's continually to increase. And so if we don't get this under control, we're going to be in a lot of trouble. If you think realtor.com is correct and we're going to hit $1.2 million by 2033, you definitely want to jump into the housing market. You're going to see a huge increase. Our median sales price will more than double in the next 8 years if you believe realtor.com, their projection and prediction is correct. If you don't think it's correct, why don't you think it's correct? Keep in mind, a lot of things have to fall into place for that to hit.